Hey, welcome back to Altcoin Explorer channel. My name's Biswajit, and today crypto holders, especially Bitcoin investors, you do not want to miss this. Bitcoin is approaching a key inflection point, and what's happening across Ethereum, Solana, XRP, and Chainlink paints a bigger picture most people are ignoring. So if you're holding any crypto right now, pay close attention. We've got a major liquidity signal forming, hidden bullish divergences playing out, and price action converging around historic support and resistance zones. This could be the setup for the next major move, but the direction might surprise you. Let's dive in. Starting with Bitcoin, the big one. On the 4-day chart, the super trend indicator is still flashing red, and the weekly MACD remains in bearish territory. That's not ideal, but there's a silver lining. Bearish momentum is declining. We're now trading in a setup very reminiscent of August 2024. Back then, we saw a slowdown in bearish momentum right before a powerful move up. It's not a guarantee, but this echo of history shouldn't be ignored. Meanwhile, the weekly chart still carries a strong bearish divergence. That means despite small relief rallies, the macro trend hasn't flipped bullish yet. But here's the thing, we're now testing a major resistance zone between $86,000 and $88,000. If Bitcoin manages to break above this, hold that level and flip it into new support, we could be looking at a target near $98,000 to $99,000. Now that sounds great, but hold on. We're not out of the woods. There's massive resistance waiting at $92,000 and $96,000 to $97,000 due to historical volume activity. Price will likely struggle there even if we see a breakout. The path forward, we need a confirmed candle close above $88,000. Without that, all bullish setups remain speculative. Let's zoom into the daily chart. We recently broke above a descending resistance line, which is technically bullish. There's also a short-term bullish divergence playing out, which tends to result in either a small rally or choppy sideways action. That's exactly what we're seeing right now, a grind upwards with low momentum. This divergence hasn't been invalidated, and since these patterns usually play out over 2 to 3 weeks, we may still have more upside ahead. On the 4-hour chart, the price is pressing against a descending resistance line, now sitting near $85,300. A breakout above this level could send Bitcoin toward $87,000 to $88,000. But keep in mind, this is a liquidity magnet zone. There's a thick wall of liquidation orders sitting right above us, especially between $86,000 and $88,800. Speaking of liquidity, the Bitcoin liquidation heat map reveals a compelling pattern. There's little downside liquidity, and most of the action is stacked just above current prices. What does this mean? Historically, Bitcoin tends to move toward areas of high liquidity. With liquidity clustered between $87,000 and $89,000, there's a stronger chance we push up to that region to hunt those orders before any correction kicks in. But again, this doesn't guarantee a rally. The market can still fake out, especially if we don't see follow-through volume. So watch closely for confirmation before getting too bullish. Next up, Ethereum. ETH is bouncing off a major support zone between $1,400 and $1,550, which has held multiple times throughout the past year. Much like Bitcoin, Ethereum is in a short-term relief phase driven by Bitcoin's momentum. And since ETH usually mimics BTC, this bounce isn't surprising. That said, Ethereum remains inside a broader bearish trend on the weekly timeframe. Until ETH breaks and holds above key levels like $1,700 to $1,800, we can't call this a full recovery. But in the short term, the bounce looks healthy, and the bullish divergence suggests this relief could continue for another week or two, especially if Bitcoin keeps climbing. Now, let's talk Solana, and this one's looking interesting. Solana has managed to break above a prior resistance zone between $120 and $130 and is now testing the next level at $136. We're also seeing a confirmed bullish divergence on the daily chart, which supports the ongoing upward grind. If Solana can close above $144 to $146, we could be looking at a breakout rally towards $166 to $167. On the flip side, if resistance holds, we may see a retest of the $126 support zone before another attempt higher. This pattern, consolidation, breakout, retest, is textbook Solana, and with the bullish divergence still intact, the bias is tilted slightly bullish over the next 7 to 10 days. XRP holders, here's the deal. XRP remains inside a descending parallel channel, which means it's still in a broader bearish trend. We haven't seen much change on the 3-day chart, but the daily is showing signs of a short-term bounce. Right now, XRP is testing the centerline of the channel, currently sitting around $2.11. If XRP breaks through this and flips it into support, the next resistance sits at $2.19, followed by $2.28, $2.46, and finally $2.55. But remember, this all depends on what Bitcoin does. XRP, like many altcoins, tends to follow Bitcoin's lead, so any breakout or breakdown in BTC will likely echo across XRP's chart. If BTC rallies, XRP might ride the wave, but if Bitcoin stumbles at resistance, XRP will likely fall back to lower support levels. Let's finish with Chainlink, also known as Link. Link has been quietly building strength, recently breaking back above a key Fibonacci level around $12.80. That zone acted as resistance, and now it's trying to flip it into support. We're also watching a short-term bullish divergence that's still active. If Link breaks $13.20 and confirms above $14.10, we could see a quick move toward $15.50. But again, just like Chainlink's March setup, we're currently in a short-term bullish bounce within a larger bearish structure. So stay nimble, manage risk, and don't overcommit to long trades unless confirmation is in. Let's zoom out. Across the board, Bitcoin, Ethereum, Solana, XRP, and Chainlink, we're seeing short-term bullish divergences, gradual liquidity building above current prices, resistance zones that are being tested but not yet broken, and overall market structure that remains bearish on the macro. This points to a likely scenario. Relief rally first, resistance second, decision third. What does that mean? Well, we'll probably see upside in the short term, but unless BTC and others break and hold above major resistance, this is still a relief rally within a larger bearish trend. It's a setup for traders, not a signal to go all in. And remember, the market is driven by liquidity. The heat map shows most of it is stacked just above current prices. That means smart money may push prices up to fill those orders, then dump once liquidity is taken. Now, if you want to trade any of these setups, bullish, bearish, or sideways, you can take advantage of up to $50,000 in trading bonuses using our partner links below. Sign up on 2bit for no KYC, global access, and low fees. You'll even get VIP trading fees just by using our link. Or if you want an alternative, BTX is another no KYC platform we use, offering 10% lifetime fee discounts through the link below. And if you're new to trading, I've got videos showing you how to profit in bullish, bearish, and even sideways markets. So no matter what direction crypto takes, you can still stay ahead. That's it for today's update. Bitcoin's sitting on a knife's edge. A breakout above $88,000 could change everything. But until then, stay cautious, watch the liquidity zones, and respect the resistance. Don't forget to like, subscribe, and hit the notification bell so you never miss an urgent crypto update from Altcoin Explorer channel. This is Biswajit signing off. See you in the next one.